2010, going live again. Have a new phone, so actually this might be a little bit clearer of a picture or even better audio quality. I'm not really sure. It's the newer version of my previous phone, the Pixel, so I'm hoping that that's a benefit because I had to spend $1,000 on this phone, which is not fun. All right, so we'll hop right into it here, starting with the overview of the portfolio. So, as usual, uh, 38,000. It's pretty flat against the market, up 182 bucks, but doesn't really mean much in the long term of things. I did purchase a few shares, obviously. Got a share of T, one share of Corning, and 2 shares of Eastman Chemical. I've been buying, I realized, a lot of Eastman Chemical in the last like few weeks or even few months, and it's starting to constitute a bigger and bigger portion of my portfolio. So we'll see where that goes. It's really hard to kind of balance what I'm buying right now because, as pretty much everyone knows, everything's going down. So I'm just trying to evenly sort of distribute that. In terms of income, we're at $1,341.44. The also nice part about this stock market going down is that's a little heftier because every time these dividends hit, they're able to purchase a larger portion of those shares because the stocks are down so much, which is honestly a good thing. In terms of those dividends, we got a few here. So AbbVie, $16.27, which is a hefty payment. And AbbVie has been down for like the past few weeks. So again, good thing. I got more of AbbVie shares and 343 from Caterpillar. I'd love to buy more Caterpillar actually, but they haven't come down a lot yet. If this sort of decline continues, I assume that I probably will be purchasing them. If we sort these by gains and losses, the only thing that's still above 100% is Discover, Simon, and Iron Mountain have slipped below 100%. And then in the negatives, we have more and more entrants every week because that's just how things are going to be going for a while, probably. Walgreens Boots, IBM, Eastman Chemical, Cisco, they collapsed like last week. So I'm looking into seeing if I'm going to expand there. Walmart also collapsed. AT&T, Verizon, Corning, 3M, Unilever, Utz, Starbucks, and Orion. So a lot of really, really, really great companies in here. Few that to me stand out: Starbucks, 3M, Corning, Cisco, Eastman Chemical, sort of Walgreens. But yeah, some really, really great opportunities here. If we go into diversification, show us where we're at right now. So UGA and AbbVie and Starbucks all above 5%, McDonald's, IBM, and Corning and 3M at 5, and Pepsi just slipping below now. So just continuing to average in my cost on these things and just kind of see where things go. Let me switch this camera around. Whoops. So a lot of people are really freaking out about this market. I just recently turned 27. I'm not nervous about this at all. If anything, this is like a bastion of economic wealth because I'm just going to be able to get into things cheaper. My dividends are going to go further. It's all good news for a young investor and even better news for a dividend investor. So I'm not scared of the situation. I realize that my total portfolio balance is probably going to go down. I pour, 300-400 bucks a week into my dividend portfolio, and it basically stays level at $40,000. Right now it's below it, and I just keep putting money in, and it never goes up. So it's kind of funny right now, but that's just how it is. You just gotta adjust for it for a year, 2 years, 3 years. Who knows how long this lasts? If we're entering another recession. But I'd say just make the most of it. Be like Warren Buffett. Be greedy when others are fearful, and you'll come out of it on top probably, because America always wins in the end. But that is pretty much it for my video. I do appreciate you watching. Make sure you like, subscribe, and I will see you guys next week. Bye bye.